Hey everybody, I'm pleased to have Philip today with me here on the channel. Philip is a fellow YouTuber and also fellow German who's also investing in the stock markets. But yeah, today we're going to talk about what's happening in the markets currently. Then we'll talk a little bit about China. So I'm bringing Philip on here to have an external perspective, how people are thinking about investing in the Chinese space. And he's also a fellow investor in a company called Zepp Health. So we'll also chat around this topic at the end of the video. So stick to the very end. I think there will be many valuable bits and pieces in this discussion today. But before we dive into that, please, Philip, in your own words, tell us a little bit about yourself and your background.
Thanks for having me, Marcel. I'm a more or less full-time investor since 10 years. For 3 years, I was working at a big German fund company, but I already had an investment blog and then later a YouTube channel. And with the Corona topic, everything was growing in this market, but I had a long-term vision to first start a YouTube channel, what enabled me to start my own investment fund. And it's focused on tech companies, or I would say growth at reasonable prices. That's why we're talking about China, because there's so many cheap companies, and that's why I'm also investing there. We're a little bit fellow sufferers on the China topic, but I think it really can get interesting now because a lot of things what harmed those stock prices, I think we have behind them, and it's always a risk-reward perspective, but from that perspective, I think China is very interesting.
Very interesting. So it sounds a little bit like you are also kind of revolutionizing the fund world, the finance world here, because it sounds like you are kind of a fund by a retail investor for retail investor. Or help us to think about it, like how is your product structured? You mentioned like it's affordable, and what are why are you doing this? Like, what's the motivation behind this? What are the benefits for you and for those people who invest in this fund?
I mean, I was working in the industry and I found a lot of things what I think you can do better or cheaper. And also, I think active funds got a little bit of bad reputation, at least in Germany. I think in the US, they're cheaper, but in Germany, they're still very expensive. Often they're very close to the index, and often you even don't know what's in the fund. And revolutionize is too much, but I would say you can do the things a little bit better, a little bit cheaper, a little bit more transparent. And those are the three things. And I can be cheaper because people can find me through the internet, so I have lower distribution costs, and I also don't have a team. I do research on my own with the companies. Now you find so many valuable information on YouTube, on Twitter, on blogs, so you don't need Bloomberg or expensive sell-side research, and that's, I think, what enables me to do that, and also the vision to really create a product what I would recommend to friends and family. And I'm also happy I invested all my money there, so the liquid money, so I don't have to worry about taxes or everything that's or accounting, and that's kind of nice. And that's a little bit the idea, to do the things a little bit fair, a little bit more transparent. On the other hand, everybody who invests in growth stock in the last 2 years knows it was a diverse environment probably since 2000. And that was really a rough start. But I also hope, not just in China, that the worst is now behind us. And I'm also not just a growth investor, I'm also a value investor. And I think from those perspectives, that's things we can evaluate. The valuations have never been more attractive, at least in smaller companies. Large cap is not cheap anymore, but I see many interesting stocks, and about some of them we want to talk about, because they are in China, where we see valuations what I wouldn't have said that they are possible 2-3 years ago.
Can you name a couple of companies or sectors where you would say you have like this kind of your expertise, or where you have lots of research, or maybe you had some good picks in the past, like so that we can get a sense like what kind of companies you like, at which valuations, or kind of the drivers of your strategy?
I was also working a little bit in the venture capital sector some years ago, and there internet was the focus. That's definitely my focus area. Internet companies worldwide, not just in China, emerging markets, Europe, US. But per se, I'm a generalist, so I do investing in a lot of companies. When I think the return is very attractive, can be also in also different industries. I'm not really focused on just one area, but that's also why I like to understand and read other fellow investors who may be even more focused in one area. And then in China, I have some, I would say, some weakness because I had some 10 baggers some years ago, and that's why I still like the market even after those 2 years. And it's also maybe a learning. You're not as good as you think if the stock price appreciate like crazy, and you're not as bad as you think if they come down so much, because like I think I bought stocks like Webshop or BitAuto, and it was like 8 years ago. I'm definitely a much better investor now, but it just, okay, they were growing 30%, the PE ratio was 15, I buy it, and it was growing 2 years more like that, and then the PE ratio went to 30 or 40, and then I sold or not. And often the most simple investment cases are like that, but you need the tailwinds from the market and from other. And if you have headwinds, we can discuss a lot about crazy valuations and very interesting companies, but you don't see the price appreciation.
Yeah. So I get the sense that you are not a newcomer to China from just the fact that you already invested in that years ago, and that means that you're not just now jumping, let's say, on the bandwagon, but I would say, well, actually the bandwagon was possibly during the hype in 2022 or 2021. So yeah, what's your perspective on this sector? First of all, maybe what's gotten you interested years ago already? That might be almost like early adoption, right? And what's your perspective nowadays? I mean, we have lots of negativity around the China space, right? It seems the fact that you want to talk about China, it seems that it doesn't affect you in a way that you want, not get your hands dirty in terms of doing some more due diligence and see what value can be found in the sector.
Those are two questions. Maybe the first question is what got me interested. I mean, when I was working as venture capital companies, I tried to find peer companies for portfolio companies. And then I was not just looking in the US, and then I really got interested in all the companies who are there. And then you also were looking in China. And even then, 8-9 years ago, the valuations were very cheap. Not that cheap as now, but for sure the growth was a little bit higher. But compared to the US companies, it was very cheap, and that got me interested, because if you come from the valuation perspective, for sure you pay a little bit discount maybe to the China risk, but at that time the discount was much smaller, and then you try to invest. And I think in those companies there, at least in German, there nobody was talking about this in the typical online board or something like that, and that changed, especially also with social media and the YouTube boom. But I think now we're really on the really down point again, at least I hope, because a lot of, like I told you about, harm the stock. I think those points are not valid anymore. We also can discuss that. And the second question was about...
what about the current stage? Like, why are we having this interview basically now in a sense, like, we're now here and basically getting interested into Chinese stocks, but you kind of made the point already, like you hope that now is like the most negative point in this timeline, but what leads you to this feeling? Maybe it's a feeling, maybe it's backed with some data also. What are your thoughts around this?
Well, point one is valuations. Valuations are crazily low, and that hasn't changed in the last year. But I think from the news flow, it's much better. For example, 1 year ago, the valuations were also very low, but I think the headline was still very concerning when you saw like the big party convention when he was really pushed out, and that really, I don't know. I understand when people get a little bit scared with that, and China was still in lockdown, but now lockdown is over. I think you still see very clear signs of the Chinese government that they're interested in economic development, that they also want that stock prices rather increase, that the people don't just buy houses, that they also buy stocks, what's a much more balanced portfolio strategy. And also between US and China, I think they're both interested that there's at least a stabilization from the relations, and they're not, both sides I think are not interested in a further escalation. Now with everything was happening, and I think the news flow has improved. Also, we see signs of the growth. It's coming back. The companies are much more rational. They're also pushing for profitability, what we also saw in the Western internet companies, and the momentum, that's also important to watch at those stocks. You see, if you look at for example, the China Internet Tech ETF KeyWeb, there is a lot of stabilization. And I think if once it push about $30 again, then I think a lot of people can jump again on the bandwagon, because from those sides, it's interesting. Even the interest rates. I mean, everybody was complaining about the high interest rates in the US, and that's why the stocks fell. In China, the interest rates are falling since some time, and the stocks are not increasing. So you see often those explanations are a little bit, it's not so simple at the point.
Yeah. I mean, I'm a China bull, so I largely agree with your points, and you sound very rational. But let me also play devil's advocate, which is like, what if none of this matters? Is this enough to drive investors back into the space, or could there be, let's say, the situation that simply nobody wants to tap into the China space anymore? In your views, how do you think about that?
Well, it's already like that. I think the share of international investors in China stocks is on all-time lows. So those they just can come back. I think there's not a lot of selling potential. And on the other hand, you have the local Chinese people who can buy Hong Kong stocks, or you also can see like sometimes the valuation gap between two stocks. One is listed in Hong Kong, one is listed in China, is crazy. Like, for example, if you look at, I think, Goldwind. It's the leading wind turbine producer in the world, I think, even with Vestas together. The Hong Kong stock has a lot of discount, and even the Chinese local stock is not very expensive. And from those sides, I don't know when it will happen, but from the feeling, and also we have a bear market, I think, in China tech since 2.5 years.
Yeah.
I think that the high point was in February 2021, so it's even more, 2.5 years. So I think the longest bear market in tech was 2000 to 2003. That's a pretty long time, and if you put all this together, I think that's a very important lesson as an investor. You have to think in probabilities, but I think the probability that there will be a recovery is pretty high if nothing crazy happens on the I don't know, macro level. I don't say interest rates, but war or something. No? If China would start, I don't know, supplying all their weapons to Russia, those are things. Yeah, if they would surprise attack on Taiwan, for sure, then everything what I said is bullshit. But I think the probability for that is pretty low at this point. And also from a portfolio perspective, I mean, I'm a global investor. I'm not just investing in China. I have an own developed model where I manage how much I invest in the 5 world regions. One is China, one is Europe, one is US, one is emerging markets, and one is other industrial countries like Japan or something, or UK. And normally I invest more or less 15% in China, can be a little bit more in the next month. So it's not a crazy risk, I would say, because other guys, they have 15% in Tesla, and they also can, or in other various high risk stocks. So from that perspective, I can sleep well. And I think there's also risk not to invest in China, because if you come from a passive mindset that says, hey, you have to invest in everything, yeah, but if you don't invest in China, what's probably together with the US, the biggest economic power, and you invest 80% in US and nothing in China, I think that's also imbalance. And I think the last 10 years was the right thing to do, just to invest in US, and all the other stock markets, they haven't appreciated almost, if you count in inflation. But the next 10 years can be very different. And then you have a lot of recovery potential, because you can buy Chinese stocks to the prices of 2013, 2014, and there was some growth in the last 10 years there.
Yeah. All right, let's talk about a specific company, which is Zepp Health, which we are both invested in. So just as a disclosure, this is not meant as investment advice. However, as a part of a due diligence and intellectual discussion around this company. And it's funny, because it's a very small company, right? And you also picked it in this entire space. So you possibly think that either the fundamentals are incredibly exciting, or you just see more upside and less risk than in comparison to others. Maybe give us a little bit of background, like when you started watching this company, what is your first impression around it? How do you rate this performance? And what are your current thoughts about investing in Zepp Health?
Yeah. I mean, China stocks, they really had horrible 2.5 years, but Zepp Health was even worse. And I think it was also probably one of the worst investments in the last 3 years. I have a system where I manage the position size. So on absolute terms was not that painful. But for sure, it's if you look at the stock price, definitely everybody who talks about Zepp probably is not in green. The reason, probably you also talked about it in the channel, I mean, the company at the moment is not profitable, and they really had decreasing revenue, because the Xiaomi partnership revenue was decreasing. But even when we invested or had a look at the stock when it was 10 times or 8 times higher, it was really not expensive if you compare to Garmin. I think it's a 20 billion company. And now Zepp, I think they have a market cap 70, 80 million, something like that. But regarding to size, to Garmin, they're not crazily far off. Yeah, for sure, Garmin is the premium brand and probably the product. But if you just look at those numbers, it's crazy. And I would say wearables is still a growth category, and that's a pure play. I mean, if you like wearables, you can invest in Apple, but even the Apple Watch maybe is 2-3% of their business. And I had an Apple Watch, for example, before, and I'm not using it anymore, because I don't want to charge my battery every day and put another thing on next to my bed. And that's also very important. If you always, at least in hardware companies, you should buy the product and have it and check it out. I'm really positively surprised. I mean, for me, they're way too cheap. I think it cost me €60. That's $65, $70. And they even have a very good mobile app, what's really not the standard with those companies. And I'm using it a lot now since 3 weeks, because the battery time is 2 weeks. And from valuation, they said they want to become profitable the next quarters. In the last earnings call, I also had a call with the CFO, who was very bullish, what I can say, and also is pointing out the long-term vision, what's very interesting. So if they deliver, we don't know. And sometimes even Chinese companies, they deliver great numbers and nobody cares, because nobody trusts those numbers. But for me, they make a very sensible, or let's say trustworthy impression, because sometimes you write a company and they don't come back to you, can also happen. So if you really get fast a talk or a conversation with CFO, is a very positive sign. And if you do the numbers, 70, 80 million market cap, I think they have almost the same in cash. So you get basically the company more or less for free. It's not negative, but let's say 10, 20 million. So if they just post positive numbers and show some growth, and that's the near-term vision. Yeah, that's the speculation of the next 1-2 quarters. But long-term, you also have a long-term investment case, like all the data, what they're generating, and also what you can do together with health insurance, with those kind of things, or even develop new products, because like medtech products for professional use are crazily expensive, but for consumer use, they're very, very cheap. So I think there's also a space for them. If they, for example, here I can measure my blood pressure. Yeah, I don't know what the difference in accuracy is, but a professional product probably cost me 500-600 euros, maybe a couple thousand. It's definitely a factor 10 or 20. And for consumers and also the elderly, yeah, if they can measure their blood pressure, or I get I get a call when my father falls down or something like that, I think that the use cases they will evolve, and they're huge, and they are already now a leading company. It's not just some startups, because they're selling those Amazfit wrist brands and smartwatches by the millions. So they're definitely, I think, one of the top 5 players in the world. From their perspective, it's a very interesting upside case, but for sure it's very speculative, because at the moment they're not profitable.
Yeah, I mean, maybe a similar question then with the question about Chinese stocks, like what could bring in back investors for Zepp Health? Because you mentioned, like, you think the wearable market is interesting, is still a long case growth scenario there. And on the other hand, I think that's one of the big issues, right? Zepp Health stock, that the trading volume is like abysmal, right? It's, I think, like yesterday, which was one of the better days, was like $50,000 traded, and the company is trying to buy back stock. They're limited to how many buybacks they can do of the aggregate trading volume and such. So it seems there are some structural issues, and you named already, like trust might be one issue. So also really highly like that the CFO is that outgoing and approachable. I also went to the headquarters in Beijing, actually, because just like you said, like in Western investors, they're sitting 10,000s of miles away and have no idea if the company actually exists and if it's legit. But as you mentioned, like Zepp Health largely sells in Europe, largely sells in South America, and maybe in the US and so on. So this is not a made-up product and company in a way, right? But still, like, what could drive the trading volume up? Because just that's a very technical one and a detailed one, but I think you're also trading on Wikifolio, which is a way of setting up those funds, and I can't even add Zepp there because they are not listed at all of the required stock exchanges to be traded. And so I think there's an issue with not a lot of coverage of the stock, not a lot of funds having it as a part of the flow. And so we really need some good arguments for investors to come back and pick up this company. So one catalyst could be profitability, right? Or what else do you see?
Yeah, I think that's point one. They have to deliver profitability, and then I think the people who are in the stock, they don't want to sell. That's also why the liquidity is down. But if you have profitability, then you don't need so many new investors. Yeah, and also price action can change very fast the perception of a stock, especially not just private investors. Yeah, I know both worlds, so that can change pretty fast. And at least for private investors, the liquidity it's not problematic. If you want to invest $2,000-$3,000. It's your order gets executed, and in the first step, private investors enough for a stock like that, or maybe 1-2 smaller funds. But they have to deliver. Then momentum can change, and that's often I think there's the if the momentum is there, it can be enough, and the stock has the room to grow from a relations perspective. Many times the current share price, but it's an option, I have to say. No, that's definitely a stock where, in the worst case, you have a completely wipe out. That's I think you should know, and but I think from the risk return, it's attractive if they deliver the next 1-2 quarters, and I think then the interest rate can get higher. With Wikifolio is a special case. It doesn't depend on, sometimes they have to fill out some formula and that they can be traded in Germany. But for example, I not just have a Wikifolio, I also have a real investment fund, and there you can buy it. And but yeah, liquidity, it's a position. I can have a small position, but for sure I couldn't not have a very big position in Zepp. And also disclosure, for sure I'm invested, and there are conflicts of interest of that.
I mean, yeah, we are very positive around the possible scenarios and outcomes here, of course, to the upside. But you just mentioned a couple of downside scenarios in terms of a wipeout. I think what's good to know right now, and we should mention maybe again, is that the delisting seems to be currently completely off the table. By the way, that's also what Zepp Health CFO mentioned to me, that they approached their lawyers and so on, and that was one of the big overhangs for a couple of months or years even now for those micro caps, but that seems to be gone. So in the end, if you buy a stock, you own a piece of the company, you should be aware of that. And then there's another interesting piece, which is that of course the CEO owns a large stake of the company, and also with the proactiveness of the CFO and this large ownership, there should be less chances of a takeover of the company given those low valuations, right? Because you would have to need that the CEO is going to sell out completely, and if he believes in this long-term vision and the company is being that active in kind of restoring their reputation and the stock awareness, then I think these are some good signs there. But not to say that this is without any risk. Are there any other red flags or like kind of downsides where in the past, like maybe in earnings reports or so on, they have disappointed your initial thesis, or something where you are still struggling to understand where the company is heading, like some of your question marks around the stock? Do you have anything to share in this regard?
Good. What happens often, and it's a positive downside, I would say. It's a going private by management. If valuation is so low, and then sometimes the management makes an offer and they say, okay, we pay you 20% more, but we take it off the stock market, and then 2 years later they list in China to 4 times the price or something like that. And as a free shareholder, you don't have a lot of things to do against that. And even probably maybe if you buy now and then you're happy about 20%, but with this high risk stocks, if you want to do 20%, I think buy something else. And here the idea or the investment case is not to do 20%, but to do much more. I think what's the founders invested, but also what's maybe also conflict of interest is Xiaomi. Xiaomi is still the shareholder. They're the big client. So that's things is not perfect, because okay, now they're selling less to them, but they're still invested. Do they like that they now have their own brand? Those things I prefer have a more like a clean shareholder structure. That's maybe from a European perspective not a red flag, but something I think you should know. And also then opinion, okay, if it's so cheap, why is not Xiaomi buying it? And I don't know. That those. But if this is not happening, then maybe you also can interpret it like that okay, the CEO really wants to be CEO of a listed company, and he wants to increase the share price. And I think if he delivers, and the signs from the CFO, that's I also interpret it like that they're interested in that. Because if they want to do a delisting, they would not talk to us, to be frank. Because they would be interested in a lower share price, and I did not have this impression.
So would you actually prefer that Xiaomi, for example, as a partner, is divesting of the company and creates a shareholder structure in which just institutional and private investors are the major shareholder?
Yeah, I would prefer that. It's that you have to find somebody who takes a stake, because you cannot sell it through the stock market. The liquidity is too low.
Sure. All right, Philip. Thanks a lot for your perspective on these matters. I think we should revisit this in a couple of months, maybe, and maybe go down in some more of the names. I thank you for taking the time coming onto this channel. And where can people find you?
With my name, Philipp Haas, / Investor Search TV, and then you find my YouTube channel. That's probably the biggest social media presence. If you're German, there's all, but everything is in German, so you still find a blog. I have a weekly newsletter, and if you're German, you also can inform yourself about my fund, where I invest in stocks like that. And if you also look on the shareholder structure, almost no fund worldwide is there. I think they have two local funds. So it's really I go where not a lot of people are going. And in the past, has worked very well. The last 2 years, not so much. But I think I hope that this is about to change.
Cool. Then thanks again, and yeah, see you next time.
See you. Bye-bye.